Yo, what's up world? It's your boy Rocky Rats. In today's video, I want to talk about making trading rules. I believe trading rules are very important because you need to abide by a certain set of criteria before you think about entering a trade. In today's video, I'm going to explain the 3 setups that I play for listed stocks, and I want to go ahead and dive into it. The 3 patterns that I mainly focus on when trading stocks are the first green day, the second day surge, and the third day surge. I'll primarily focus on these patterns specifically in listed stocks to stay away from all of the randomness. But let's go ahead and dive into it. I want to break down each of the patterns, and I want to go into the rules for each pattern that I play. Alright, so this is the ideal first green day. The first thing that I look at when identifying the first green day pattern, and this is just a past example, is this day right here, right? So I'm gonna just back up, and when identifying a first green day, I need it to show that it's traded at a normal range in the past. That's a very big first step that it needs to show. Is the stock a former runner? And as you can see here, back in 12/9/2022, the stock had massive range coming from a low of 113 to a high of $4.54. And I can't do that right off the top of my head, but that is a massive percent gain, which definitely puts it on radar and to show that it has potential to run. Now this isn't the day I would look towards trading it. I believe that this is more random, because if you were to cut off the rest of this data and not look at these days and just go back in time a little bit and just look at 12 from 12/9/2022, this stock, it never had any other history of running big with volume. This is that first day that actually showed that it can hold its gains. So you don't want to pay attention to this stock or even trade this stock, because it just hasn't shown you enough history of what it could possibly do. Just kind of want to just see that it has a possibility, it has spike ability to hold massive range on a day. And the day I'm more interested in trading it is this day, 2/16/2023. That is the day, and you can match it up with the volume as well, as this stock, it traded above its about 50 million in volume. And I would say anywhere for stocks from $1 all the way up to $15, anywhere from 25 million and above is abnormal volume for a stock in the listed market. So when a stock gets above around 25 million and starts churning by that 40, 50, 60 million mark in volume, that's when I think that's around like just an average amount for abnormal volume. So when you go intraday into this, what is this day? This is 2/16/2023. And when you look at the intraday chart, and we're just going to fast forward, and I'm just going to put 16 here just so we see the gains. And right here, I want you to notice how it just spiked out right out of the open and then just consolidated. So this day right here would be where I would really put this stock on radar, showing that it has a lot of spikeability. Still wouldn't trade this stock just because of what it did intraday. I don't like when stocks spike immediately at open and just right at open go from 211 to the high of 374. I want some consolidation, some sideways action on the 15-minute time frame for some alignment to set up. Another great example of a first green day pattern is this pattern right here, or is this stock right here, Foxo. So back here at 126.2023, if you look at we're gonna go back into the intraday. We can see that this stock had an initial run right about 20 million shares right here at 126. But if you can look back in time, this stock had a run again back here at 2022. And this showed that this stock has spikeability, able to hold its gains. So on this day, you had to really pay attention to what the price action was doing on it. And when you go into the intraday again, it gives you areas to enter the stock. So when I go into that intraday and I look, where are places where I could possibly enter this stock? And I like entering first green days off of very just the simplest way possible. Is it providing a range? To me, this range from 54 is great for entering and a great place to risk your shares off of. So once you get that area and you see that it's holding VWAP, which is indicated by this purple line right here, you could easily take some shares around this 56 area, risking off 54 and selling into that high day pop that it did around 70. So from 56 to 70, I'm not sure how much that is percent gain, but that's a nice, easy trade to take. And that's pretty much my examples for what I am looking for in a first green day pattern. So when I do trade a first green day pattern, the first thing I'm looking for is it a formal runner? Then the second thing is it aligning up intraday for me to take a potential trade on it? So by lining up, I mean, is there sideways consolidation? I don't want to trade anything to just spike straight up. I want to see some stock that is able to hold its gains like Foxo did in this example. Once I see that, I'm looking for an area on the 15-minute chart where I can risk. And the third thing is, can I identify area in the stock for me to risk if I'm wrong? In this example, it gave me 54 as a clear risk. So once I have all of those factors aligning, and it's a former runner, big percent gainer aligning on a 15-minute chart, I'm able to go intraday and enter in the level, be able to risk off of a certain key level and take a trade for, take that trade with confidence. The second pattern that I like to focus on is the second day surge. So if we look in the intraday, and one of the more recent stocks that this pattern had an example on is BVS. And it's key just to see that this big volume day, it hasn't been a formal runner in the past, but how I play this certain pattern is I'm playing it just, if you look intraday and we go back in time, we see that it had this big spike on this first initial run up day from 170 all the way up to a high of 286. And we see on that first day that it runs all the way down and it holds this key psychological number as 2, right? So on the next day, I'm looking on if that area of 2 holds and seeing if it provides a potential push, right? Because a lot of people are still holding short over this day, and because it's not going any lower, some of the people that are short will be scared and will get a nice little pop. And we see on the next day that we hold that 2 level and we start getting that sideways consolidation area. On the second day surge pattern, I'm looking for it to hold a psychological area. I'm looking for it to be above VWAP. It has to be above VWAP. Has to go sideways, ranging, and so I prefer it to be ranging sideways in the afternoon time, and it has to get over previous level or previous like intraday level of the next day. To me, that level or the little pop was at 225 level, and when it started popping over that 225 level, then it gave me that idea. Hey, this stock can actually go from maybe 225 to 250, which is what 10 to 15%, which is all I'm looking for at this for this particular setup. So what I want to see is some very tight sideways consolidation. I want to see it above VWAP. I want to see it come from a beaten down stock, a stock that spiked up yesterday and just got beaten down the whole day and holding that range. And I want to just take it right into this little pop area, or right where I could be able to risk that off of 223 and enter right probably around 230 and sell right into the 250s. So that's all I'm looking for that second day surge type of pattern. For the third and final pattern, it is the third day surge. And I'm going to start this example with another recent runner, THMO. As you can see, you got three continuous kind of pops, and also seeing that continuous volume. So with this example, THMO, you can see that volume came in here at 315 and then held 316 as well. But if we look intraday, and as always, I like looking at the 15-minute time frame. I'm really just looking on that third day, which is 317. We got three straight green days, but on these in the intraday chart, we have it so it never really gave that overextended pop. And what we're looking for in that third green day surge is this that final like exhaustions pop. So then what I'm really looking for is just that sideways consolidation all into the afternoon where it's just going all the way until post 11 a.m. and we get this little pop. We get this pop past 565, and we get as high as 668. So in the third green day surge, we want it to be above VWAP. We want it to be relatively close to the previous days and previous days range, and we just want to get that pop and that over exhaustion. Another example of going back to this one is AMAM. And if we look at that daily chart, and we go back in time, we see we get that third day surge right here on 221. And I will go back in time to show you guys the actual example. And you see that we have this pop right here where we get over this resistance that we've set off from that first day. And we can pretty much play off of that key pop too. We can play off of that high daybreak over a previous day's resistance, and we get a pop right at open time. So this is an area where if it pulled back, I'm pretty comfortable trading in the morning time if it pops over that previous volume, and we just ride it for that extension. It's been about 3 days and the stock continues going green. So we're not looking to continue like trying to hold the stock. We're just trying to sell into the extended volume pops as shown right here in the volume down here and also in the candlesticks up here. So there's a couple ways how to play it. You want to either play it off a sideways consolidation and sell into a rip, or you want to play it off a previous resistance and sell into a rip. But they must always come from former runners. A stock has to be holding the range from previous days, has to get over a previous wick on the candlestick on the daily chart, and it also has to be trading with continuous volume. So that is what I'm looking for when I'm trading the 3-day surge pattern. And hopefully, this information is valuable to someone. And if you like this type of information, please comment, like, and subscribe.